Hey soldiers, the United States Senate has recognized an entity that's better than them at putting their own interest over the interest of the people they are supposed to be entrusted to care for. What am I talking about? One of the largest financial services companies out there is doing something with an asset that is probably not in the best interest of its customers, aka we the people. They are targeting retail investors, me and you, mom and pop, okay? Not the big institutional guys, but us. They're targeting retail investors with an asset class that is anything but stable. And they're doing that for retirement funding, which is, hell, you might as well go to Las Vegas. All right, so what am I talking about here? Fidelity. You've all heard of Fidelity. Maybe you do business with them now. They're doing two things here that is a little suspect in my book. Now, they are opening up the floodgates and letting retail investors participate in trading and investing in cryptocurrency, specifically Bitcoin, okay? They're opening up the floodgates and letting folk come in and start to deal with this. Here's the problem. Bitcoin is speculative, okay? And I think even the devotees out there would attest to that. When you look at Bitcoin, it's very, very volatile, all right? Now, sure, have people made money with Bitcoin? You better believe it. If you know what you're doing and you've done all your due diligence, then this is something that could certainly work for you. But as you can see from these charts, and just taking a look at the 1 year, last 12 months, Bitcoin is extremely volatile. Now, you can make an argument and say, well, many stocks are volatile, and you'd be absolutely right. Thing is, a stock in a company like, let's just take, for example, again, these are not recommendations, Palantir. Palantir is a very beat-up stock, but at the end of the day, there's something that backs that stock up in terms of value. It's intellectual property, something that is realized with regard to the end user product. Bitcoin doesn't have that, okay? And again, the devotees can come out, those people that are, really wild about, enthusiastic about Bitcoin. I challenge them to tell me what the value of the underlying value of it is. Well, the dollar doesn't have any underlying value. I've said it before and I'll say it again. The value of the dollar is based in the United States' ability via the IRS to kick down your door and charge, if you don't pay your taxes. So is that right? Is that proper? Do I agree 100% with the taxation system? No. But do I pay my taxes? Yes, because I got better things to do than sit in a federal prison. So while the dollar is not backed by gold, there is an enforcement mechanism out there that does promote the payment of taxes to undergird all of these, profligate spending initiatives that we have, that our politicians have here in the United States. Okay, so you want to invest in Bitcoin, fine, knock yourself out. But again, I do challenge you to tell me what the value is. And that's an important question when we're talking about what Fidelity has been allowing people to do, which is invest in Bitcoin in their 401k. Now, the 401k is a qualified account that is supposed to be for your retirement needs. This is not some basket that's intended for you to be able to speculate on, the hottest new investment trend. This is money that is supposed to be there after your prime earning years have, ended, and you're trying to hopefully enjoy life, all right, and having enough money to do so. You will be in a very sad situation if you go out there as a retiree and you outlive your money. Now, the volatility of Bitcoin makes that a distinct possibility when, A, you're investing in one thing. A lot of these 401ks want you or offer you mutual funds, index funds, something that has a lot of diversification to it. And the reason that is good is because, do you really want all your retirement eggs in one basket? Now, are you only supposed to have a 401k? Absolutely not. you're supposed to have a lot of different vehicles working in concert to help you build wealth. But in that 401k, remember, the government is giving you some leeway up front, saying we'll reduce your taxes under certain circumstances by the amount of money you put into this 401k. We will reduce your taxes now. You'll pay the taxes later on down the road. Okay, that's one gift that they're trying to give you. And these losses, if you incur a lot of losses in a 401k plan, then you're going to seriously jeopardize your retirement. So they're doing that. And the other thing that Fidelity is doing is they're just letting retail investors come on in and invest in crypto. I tell you, listen, be careful. Understand what you're investing in, because here's the other problem I have with Bitcoin. Right now, it's extremely unpredictable in terms of price. That volatility, and I know that folk are talking about some technical solutions to this, which would be great, but for the most part, right now, if I buy something with Bitcoin, let's say I go to the grocery store and I buy a steak. Let's say it's a $30 steak. I buy it in Bitcoin. Okay. Let's take something else actually, because the price, I want this example to be a lot clearer. As you can see right now, Bitcoin is trading at just above $17,000. So let's take a used car. Let's say I go out and we agree on the used car, buyer and seller. We agree that I'm going to buy the car for $17,000. All right. So I hand him a Bitcoin. Well, I don't hand it to him, but I transfer him a Bitcoin. And okay, perfect. Now, can he convert that Bitcoin into some other form of, value, be it dollar bills or gold or yen? Can he do that before Bitcoin suffers from volatility and drops in value? Now, we're looking at the 1 day right here. And you can see that Bitcoin was trading earlier today at $17,746. So if it goes down to that point again, then he's lost money. The seller has lost money in our analogy of the used car sale. But there was a point today where Bitcoin was at $17,124, which is higher than $17,000. So in that case, I, the buyer, I would have lost because the value of what I gave him would have increased and I would in effect have paid more for the car than we agreed upon. So that piece of it is kind of sketchy right now. There are technological solutions that people are working on. XRP is out there trying to do their thing in terms of working on this to shorten that time between transacting in it and then turning it into some other form of value. Okay. And let's just be honest, by the time you retire, I'm sure that technical solution will be firmly in place. But will Bitcoin? Remember, Bitcoin is not the oldest asset out there, okay? Bitcoin came into existence in late 2008. So it hasn't been out there a long period of time. Now, is that to say that it's not, going to take off and it's here to stay and it's going to do gangbusters? Sure, it might. Are you willing to trust your 401k to that? Fidelity begins opening retail Bitcoin trading accounts. Fidelity, one of the world's largest financial services providers, has officially started opening retail Bitcoin trading accounts. Now, look, let's address the word trading. Trading is not for everybody. Trading is high frequency. Now, are there people that can make money at that? Absolutely. Do I think that the average retail investor is going to be situated and capable of doing that? I don't. I really don't. You'll notice that after going into and slightly after the Great Recession happened in 2008, a lot of traders came onto the scene. People who wanted to trade stocks at high frequency, taking advantage of minute changes in the value of, given stocks. And again, there are people that can make money at that. Most people don't have time to even study how to do it. It is a full-time job. It's not something that you just get into and, 2 weeks later, you're a millionaire. That's not happening, okay? Those Hillary Clinton deals, she was dealing in cattle futures. I think Hillary probably leveraged her network, and it was more of a, who she knew as opposed to what she knew in that case. Will you be able to do that? Ask yourself. The development comes, this development of Fidelity allowing Bitcoin trading, the development comes after Fidelity's announcement of a wait list previously this month, a wait list to actually get into this. So it's people are banging down the door saying, I want to trade Bitcoin with Fidelity. According to a report by The Block, certain users, presumably those on the wait list, received an email detailing the release, which stated the wait is over. So here we go. Here we go. All this enthusiasm. The wait is over, guys. Come on in. We're opening the doors. Come on in and start trading Bitcoin. And look, Fidelity's going to win regardless of whether you do or not. All right. Trading is not free on their platform. Fidelity has been active in the Bitcoin industry for some time. According to the company's website, it began mining Bitcoin in 2014. In addition, it launched a spot Bitcoin ETF in Canada in December of 2021. However, the financial services giant's interest in Bitcoin has not come without criticism. We're going to get into this in a minute. Having been the subject of a U.S. Senate scrutiny, for its offering of a 401k plan that allows users to allocate assets in Bitcoin. The same criticism has resurfaced again recently from the same group of senators who stated in their latest letter, quote, Fidelity Investments has opted to expand beyond traditional finance and delve into the highly unstable and increasingly risky digital asset market, unquote. Despite these warnings, Fidelity appears to be diving headfirst into Bitcoin as interest in Bitcoin amongst the traditional finance community continues to grow. And now that Bitcoin has dipped, a lot more people are probably going to become interested because it's more affordable. It should be noted the move comes at a particularly interesting time, given recent developments surrounding the collapse of FTX and the heightened attention being paid to volatility in the industry. Now, look, I know FTX and Bitcoin. I know the differences between those two, okay? And so I'm not casting any aspersions on Bitcoin other than to say it is highly volatile. It's not accepted in many places at all. It's accepted in none of the places that I go. Maybe that says something about me. I'm not pretending to be hip. So it shouldn't be a surprise that the farm that I go to buy beef does not accept Bitcoin. With industry perception perched so precariously after this whole FTX thing, the actions of behemoths like Fidelity will almost certainly have ramifications for the future of Bitcoin regulation. So they're saying these big boys, these behemoths, if they screw this up, ain't going to be pretty for Bitcoin. So if you are one of the Bitcoin enthusiasts, just, you don't want to see a Goldman Sachs of Bitcoin. Now, do you? All right. So the senators, I think that they were right to take a look at this and say, wait a minute, Fidelity, what are you doing? What are you doing? These are 401k plans we're talking about. An open letter from 3 U.S. senators was sent to the CEO of Fidelity Investments to condemn the company's recent launch of a Bitcoin 401k retirement plan. Senators Elizabeth Warren, Richard Durbin, and Tina Smith called Fidelity's decision to offer exposure to Bitcoin through retirement accounts immensely troubling. I'm going to have to agree with them because, again, you're going to see extreme volatility, all right, in Bitcoin for the foreseeable future. And the other thing is, think about the young employees. Now, older employees may be less likely to take this route, but young employees probably feel very enthusiastic about investing in a Bitcoin related or investing a portion of their 401k in Bitcoin-related assets. The senators argue that Bitcoin is a, quote, volatile, illiquid, and speculative asset, unfit for retirement accounts of U.S. citizens. The legislators continue to explain some statistics in detailing the small amount of money that is, on the median, held in these retirement accounts. Okay, so yes, right now it's a very small amount held in it, but if you've got a company like Fidelity, again, a very large company, they're trendsetter. So you can best believe that, especially if where young employees start to look for this in different employers that they might be interested in, that's going to cause these companies to want to see some sort of Bitcoin-related investment track offered in a 401k plan. And when I say these companies, I'm talking about the employer. The employer makes the decision of who they're going to go with for their retirement services benefits, okay? So, for example, Verizon used to have Fidelity. I think they still do. So if you've got some hotshot young employee out there just graduated from college, they might say, hey, one of the things I'm looking for is a company that their retirement services provider offers some 401k that invests in Bitcoin. Okay, so I think you're going to see more of this, which, I don't know, I just caution folks, again, this 401k money is supposed to be for that point in your life when those prime earning years are over and you want to sail or you want to go lay on an island. You don't want to work at Walmart, right? So why invest in something that is speculative? And here's another thing. Let's say Bitcoin tomorrow morning, it just something happens that just proves the concept and everybody's on board with it. Or say that happens next year or 5 years from now. What's to stop you from investing in it then? Okay, I just don't believe that any mania should be coupled with something that's supposed to be somewhat conservative in terms of how you invest, because it's investing with a particular purpose in mind, your retirement. Warren and her colleagues paint a picture of Americans in need of their retirement as they are living longer than ever before and are likely to outlast their retirement savings. That's what we were talking about earlier. The letter ends off with a damn good query. Quote, this begs the question, when saving for retirement is already a challenge for so many Americans, why would Fidelity allow those who can save to be exposed to an untested, highly volatile asset like Bitcoin? Again, untested. It's been around since 2008. And even then, it didn't, go through nobody knew what the hell Bitcoin was in October of 2008. So it wasn't highly transacted during, any part of the Great Recession. We are going through some economic turmoil now. And what Bitcoin was played up to be, oh, it's a hedge against inflation. It's the new gold. It really hasn't acted that way. Okay. So the jury's out. How will this asset behave in different economic situations in the country, in the world? We don't have enough data to understand that yet. Could Bitcoin be the dynamite solution to retirement funding one day? Maybe. I don't rule anything out. Is it today? We do not have enough data. And if you don't have the data to support this decision as to whether to put your hard-earned money into a Bitcoin-related fund or Bitcoin itself in for your retirement funding, then I think you should probably just, stay away from it in that vehicle. You want to buy some Bitcoin? Hey, maybe do it in some other fashion. But the 401k, I wouldn't advise it. But again, you got to do your due diligence. Old Tyrone is just, guy on YouTube talking. You got to do your due diligence and figure out what is best for you. Now, speaking of doing due diligence, you can do some with this video right here. We talk about how banks actually make money and why sometimes it makes good sense to take a look at a bank as something to invest in, because they've got one hell of a business model. It's a license to create money. Watch the video, find out more. Guys, I'll talk to you soon.